it's a real pleasure to be speaking with Ashok Shah, the Group CEO of Apollo Investments. Thank you, Ashok, for finding the time today. Ashok, you know, you're an iconic brand, and everywhere I turn, you're dispensing happiness, I noticed. But tell us a little bit about the story behind Apollo. When was it set up? How was it set up? And the journey to where we are today.
Thank you, Aly-Khan. First, welcome to Apollo Center.
Thank you.
Which is our home here. The Apollo journey started 42 years ago.
With you? Did you?
No, in fact, I was in the background.
Yes.
I had come back from UK, where I was involved in insurance. Basically life insurance. I was working with a firm of brokers selling life insurance. And then when I got back here, we used to have coffee farms. And at that time, for us to have coffee farms, especially the Asians, was very difficult. And there's this different story behind it. But after the incidents of our coffee farm, I told my elder brother that why don't we look at insurance, perhaps, that will, we can do something. And he decided that he wanted to do something about it. So he was in Mombasa, and at that time, Pan Africa Insurance had actually retired their executive director. And so he met up with the executive director, and the executive director said, I can help you start an insurance company. But the thing at that time was that the executive director, Mr. Navare, was only a life person. And but with his contacts, he was able to contact Swiss Re. And Swiss Re said that starting life is fine, but then that will not add value to you as shareholders, because life insurance is all about policyholders' money and so on. So Swiss Re then suggested that they could help us start the general insurance business. And when we asked how should we go about it, they said they will provide us all the support that they can. And so Sashi went off to Switzerland for 6 months to study general insurance and so on. And I was at that time in the background. So from a life insurance perspective, Mr. Navare was really the expert, and I then started looking at the general insurance side and started learning general insurance and reinsurance. So then Apollo was born, and we started off in Mombasa. And it's an interesting that Pan Africa had started off in Mombasa, Apollo started off in Mombasa. And in 1996, what happened was, I then took over as the CEO of Apollo, and we also moved the head office to Nairobi, because we didn't really do much out of Mombasa except really the administration and the whole of the selling of life insurance. Then I started to see how we could change. So Pratul, who was our auditor from '87, and he was with Coopers and Lybrand. The two of us started thinking about what we should be doing, and we said that there are two ways of growing. One is the organic growth, and the other one is inorganic growth. So we said that let's start looking at some targets, and we started looking at targets, but nothing really materialized until 2000, when Pan Africa had got in a strategic investor. The strategic investor came in because African Life was had expertise in life, and they said they started looking at the Kenyan market through Pan Africa's life business. And then I went to them and I said, what are you going to do about the your general insurance business? So the person said that, look, we are still thinking about it, and we will see what we would like to do. So in 2002, end of 2002, early 2003, we got a call from some advisors. They said they would like to talk to us about the business. So we said which business? So they said it's Pan-Africa. Pan-Africa wants to talk to you about the general insurance business. So we said, fine, let's talk about it. And they had gone knocking at several doors, and perhaps we were the one that were very hungry to go for the business. So we negotiated with Pan-Africa to purchase the general insurance business. So we decided that it will merge the general insurance business of Pan-Africa and general insurance business of Apollo into a new company. And the new company was to be, we agreed, will be called APA. The mergers discussion started off in 2003. According to the Insurance Act, the merger had to take place on the basis of the final accounts of 31st December 2003. So we worked on the basis of the final accounts of 2003. It was a asset-only merger. You had to bring only assets to the table. There was no cash that you could put in. So we finally merged end of 2004. At that time, Pan-Africa had declared another bigger loss. So the sum total that Pan-Africa had contributed to the new entity was 16 million shillings. In 2010, they came to us saying that they would want to sell their share, the 40% share. And we paid for that 40%, 855 million.
Wow.
So their 16 million in 2004 was 855 in 2010.
Wow, so you're a value creator.
So we created a substantial value for the group. At that time, so to really finance that purchase and also expand, we got a PE fund to come in. And the PE fund was
which year?
This was in 2010.
This is
LeapFrog.
LeapFrog.
LeapFrog then bought into us. They bought 27% in the holding company, Apollo Investments. And they put in $14 million. Out of that $14 million, we paid Pan-Africa the 855 million. And we started then growing the business to another level. And LeapFrog, 3 years down the line, in 2013, 2014, sold their 27% to Swiss Re.
Swiss Re did not take a stake originally when you were telling me that you had gone to them for advice. This was the first time they became a shareholder in Apollo.
That's right. But Swiss Re was our reinsurer right from the beginning. And obviously their business was reinsurance, and they supported us in reinsurance all the way. But what happened was Swiss Re at that time had a separate arm. It was a Swiss Re direct investment company, which used to take minority stakes in insurance companies throughout the world and help them grow. So they had seen APA and Apollo, but we really didn't have any talks. But we actually started talking when LeapFrog was coming in. So by which time it was too late for Swiss Re, and we said, fine, we'll see if there is an opportunity. And when LeapFrog wanted to sell, then Swiss Re was willing to come in. So our relationship with the Swiss Re was at two different levels: the reinsurer and the investor. And both of them are, they work at arm's length. They do not, there's no, by them being an investor with us, does not mean that we get any preferential treatment for reinsurance. But what happens is, as time went on, we would get a lot of technical support that Swiss Re could give us. So Swiss Re bought the 27% from LeapFrog at $36 million.
Wow.
So there, LeapFrog had put in $14 million.
They did well.
And in 3 years they got $36 million. So if you seriously look at it, Apollo has been both for us, the CanMac group, and for our investors, other investors, it's been quite a valuable property and a valuable asset. And now, after the merger with Pan-Africa forming APA, we came from a very small background into one of the largest players in the industry in East Africa. So in Kenya, we are now the second largest general insurer.
My goodness.
And as things go right now, the APA Life has started also growing. So what will happen is that I predict that in another 2 years, it will be one of the largest life insurers in the country. So
what a story. And geographically, you're in Kenya, you're in Uganda?
And Tanzania. Tanzania, we have an associate, which Pan-Africa had invested in when Tanzania opened up in 1996. So that associate, Reliance Insurance, has been doing quite well, except that in the last 3-4 years, with the changing circumstances both in the economy and the marketplace, Reliance lost its market share from number 4 is now number 7 or so. But what we have said to the existing shareholders of Reliance is that as APA and Apollo, we would like to have a majority stake in that company, and hopefully we will get it soon. If once we get that, then what would happen is that all the holding, in all the countries we will have a management control, which will help us really solidify our regional presence.
Ashok, you've had a lot of fame and fortune in doing very innovative insurance products. I mean, I think you were the first people to insure livestock and folks who make their living from looking after livestock. I think you called it forage-based and satellite-based. Yeah. You were telling me at Mindspeak that you were the first insurance company to insure people against AIDS.
Yes.
So tell us I understand the life insurance business, general insurance. Tell us a little bit about this space where you've been innovating, and what is the opportunity that you're identifying, and why, and what are you going for in that space?
Well, let me talk about HIV/AIDS.
Yes.
In the 1990s, before I became the chairman of Association of Kenya Insurers, I used to be the chairman of the Life Officers Association, which used to look after the life insurance industry. And at that time, I signed a paper which was, it was actually a document which was given to the government that as things stand, we as insurers cannot insure anybody with HIV/AIDS, because nobody knew what would happen. Then in the year 2000, as when I was the chairman of Association of Kenya Insurers, and this thing was still there that HIV/AIDS could not be insured by insurers, APA, through its medical portfolio, said that we were willing to insure people with HIV/AIDS and give them full medical...
Existing condition.
Yes,
yeah.
And give them full medical cover. So this was a complete about turn. But that was the reason why we did that, was because we realized that we could control people who had HIV/AIDS and we could insure them, and they would be insurable. in our own company at that time, we had about 10-15 people who were HIV positive, and we created a protocol for them, and we told them exactly how they can continue enjoying full benefit and full working lives. And some of them are still with us today.
Wow. That's
So the thing is that it's really living positively and making sure that you do the right things. And so we say that if we, our people are surviving, and others are surviving, and as health insurers, why can't we cover them? So we did. So those sort of innovations is what made APA insurance what it is now. So in 2007, we said we will rewrite the rules of insurance. And we had a campaign called Rewriting Rules of Insurance. And we said we are throwing away the old rule book and we are starting our new one. And that's where we started really looking at microinsurance.
Yes.
Because in Kenya, right now, each one of us as an insurer are insuring only people like you and me. We are insuring the urban rich. We are not even insuring the urban poor. We're not insuring anybody in rural area. And that's why the penetration rate is only 3%. So we say that seriously, as APA, we should make a difference. As Apollo, we want to make sure that we can do better. So we looked, we were approached by FSD,
Yes.
to see if we could assist in pilot studies for index-based insurance for crops.
Okay.
And with that also then another thing came out was the pastoralist livestock cover.
Yes.
Which was completely forage based, and we in 2010 with ILRI we started doing a lot of pilot studies in northern Kenya, and we realized that we could insure the pastoralist for the forage on the ground, and that really meant that the pastoralists who were always suffering from drought, famine, and so on, had some sort of a lifeline to cover their...
So this basically is a satellite. You're taking an image of the forage. If the forage is below a certain threshold, you're paying out automatically to the pastoralist?
Yes, we pay out automatically. We declare the trigger. The trigger is 20%. If the forage is below 20%, then the satellite will tell us how much below 20% it is, and then we will pay to the pastoralist the amount that is required for them to keep on the livestock alive by buying foodstuff, feedstock, and so on, until the next rains come. So we started. The largest payout we did was in 2015 for 215 million shillings. For about 12,000 pastoralists in northern Kenya.
So you're doing this at scale?
We do it at scale.
And then how does a pastoralist pay the premium?
The premium in this in this particular phase, the premium is paid by the Kenya government.
Oh, so it's a government...
The government identifies 2,500 needy families, pastoralist families in each county in northern Kenya. And what they do is they insure 5 heads of livestock, 5 TLUs, which then they give us the names of, and we cover them. So what has happened is right now, the latest phase has got about 16,000 pastoralists who are covered under that, and they get cover for the 5 heads, and they can buy more cover for the others. And the amount that we agreed to pay is 14,000 shillings per year, which is what is required to keep an animal healthy when there is not enough foodstuff. So that's how we work out. But the other part of this same thing, and which we feel is going to be much greater, is what we call is the crop insurance, area yield index insurance. So area yield index insurance works in a slightly different way. The government pays 50%, the farmer pays 50%, and we take an area and we agree that this is the amount of yield that
This area should normally
provide, and we cover up to 80%. The farmer is guaranteed 80% of their yield every season for this cover, and which means that we will see that it will change the lifestyle of every farmer who is insured.
So it's smoothing the boom and bust type
That's right.
scenario, right? So
Yes.
that's what you're trying to do, is it?
That's what we are trying to do. So what has happened is that this program, the technical partner is World Bank. They provide only technical support. The Kenya government provides the 50% subsidy, and we as marketers go out and get aggregators, and the aggregators then we insure through the aggregators we insure the farmers. So right now, between the crop and the pastoralist cover, we have covered about 1 million different individuals.
Wow. And I was reading The Economist, which was saying that your market size for pastoralists is 60 million in the Horn of Africa.
It can, yes.
Is that the
yeah.
market opportunity?
That's
that
right.
Yes.
The unfortunate thing is, because being insurers, we need to be able to insure in different countries, and we only have a license for Kenya, Uganda, and Tanzania. So Kenya and Uganda could be a potential for us. Tanzania not so much, because there is not so much pastoralism, but Uganda, in northern Uganda, then Ethiopia,
Somalia,
Sudan, South Sudan, Somalia. All those are potential market sizes, and because the pastoralists obviously are in that area.
Yes.
But for Kenya itself, and even Uganda and perhaps to Tanzania, the area yield insurance cover will also be very, very important, because that, the same formula will work wherever. And right now we are covering maize, but we want to also look at sorghum. We want to look at other crops, so that what happens is that we can bring in more and more farmers into the protection net. Because at the end of the day, the protection that we provide is very different from the government subsidy or government payout at the end. So those are the things that we seriously need to look at in a big, big way.
So Ashok, you've sketched out where you've come from. You've sketched out some of these important relationships that you've had, Swiss Re, LeapFrog. You've sketched out where you've innovated. Tell me a little bit about what you think insurance is going to look like in 5 years' time, and what other areas of innovation you are seeking to exploit.
Well, the thing about insurance is that, as I said earlier on, that we only market to the urban rich.
Yes.
Even the people who, the person who owns a car. In Kenya there's something very unique. Everybody, to be somebody, wants to own a car first. They don't even own the house.
They prefer the car.
They prefer the car, and that is a status symbol, I think. So what happens is, everybody wants a car. But when it comes to the car that they own, some of them cannot afford to pay, even pay the installments they might have got a loan for. So what they do is they start hiring the car out. And
this is like Uber, because whenever I get an Uber,
yes.
I ask them, is it your car? And no, they're paying $20 a day normally.
Yeah, to somebody who owns that car or something like that. So what it is for them to pay the premium, a full premium, is very, very difficult. So what we are trying to do is, we are going to bring out a cover that should give a person installment payments, for full installment payments for the car insurance. But it's not the car insurance that we feel that we want to insure. We want to get the person to understand that there are other things that they can insure. In Kenya, there's something that is very unique. There are a lot of single mothers.
Yes.
And the single mothers perhaps are maybe the most conscious of insurance.
This is an unusual number of single mothers in the continent, or
I think from when I'm looking around, Kenya has got a much higher number than Uganda or Tanzania. So that's something that we are seriously...
so a safety net for single mothers bringing up children.
and,
Probably a salary safety net so that they can maintain...
No, it's not a salary safety net. It's an educational safety net.
So that they can educate the children.
They educate the children. And as the things have changed, now primary education, a lot of it is free. Not really free, because you still have to pay a large amount of fees for other things. But then secondary is also becoming cheaper because the government has got this free education for secondary, but then tertiary becomes very expensive. So what is happening is that we have a product in Kenya. APA has got APA Alimo, which we basically give it to a single mother or any parents for, it's not confined to any particular group of people, who will then take out this policy that will pay for when the child grows up and is ready to go to university. It will provide money from the policy for the whole university education. And you can decide what sort of university you want to go to, and you can then have the sum insured based on that sort of fees that you will require in 10 years or so. But it is an important cover. It's very necessary, because what happens is that the parent is able to provide for the child's education, and if anything should happen to the parent before the child goes to the university or wherever, the insurance cover takes care of that as well. So it's a cover that is very important. But then there are other add-ons. The health cover that we have NHIF, and we have other covers as people get other covers. But what it is that the most expensive thing that can happen in a family's life is when somebody falls ill. The cost of medical care in this country is astronomical, and it just goes through the roof. So what happens is that we are trying to encourage families and individuals to take out family health cover, which will take care of, and our health cover is perhaps unique, because our health cover starts at the age of 2 months old baby, to all the way up to 75-year-old grandparent. So we have a cover which will give covers to the whole family, and it will provide protection for them in case of an hospitalization. Because it is very difficult right now to raise money. And the unfortunate part is what happens with a lot of us Kenyans is that when something goes wrong, all we start doing is, we start going around looking for Harambe. But what it is that with this cover, the family has got all the support they need from the insurance company. And we are widening our network of the hospitals that we work with. So you will find that everybody in Nairobi will be looking at the big names of hospitals. But what we are finding is that there is a group of hospitals which are the secondary names, which people do not realize, but they can take the family members there and get good care, but at a much lower cost. So the amount of money required for critical illnesses goes down, and the insurance cover will provide that. but there is what we need to get people to understand is they have to make sure that we do not go for the very expensive consultants or hospitals, but what we do is we should go for people with the right treatment, right what would I say, right expertise and so on, so that your family members can be looked after. So it's something that we have to now try to tell Kenyans: have the right insurance cover for health, for life, and for other assets that you have. But the thing that you must be sure of is that you should not be thinking that the best hospitals in Nairobi, the top hospitals in Nairobi, are the only ones, because they are good, they will provide very good care, but the thing is they are very expensive. So we can try to look for the secondary hospitals with good expertise, good facilities, and make sure that the people go there and then use their medical cover to take care of the whole illness.
Ashok, we caught up recently at this MindSpeak session with Azuri Technologies, and you were part of the panel, and thank you for participating in that MindSpeak. And we'd like you to come and do one yourself. But Ashok, tell me a little bit about what drove you into that relationship with a pay-go solar provider deep in the countryside, selling at 99 US cents per day, solar lighting and a television. What got you interested in that partnership, and where does that partnership take you, and what are you offering through that pipe?
When we want to go into microinsurance and when we want to go into providing covers to people in
just give me in your mind, what is microinsurance? What is the definition of it?
The definition for microinsurance is that it is bite-sized insurance cover.
Yes.
It doesn't give, it gives you small covers for small premiums and small daily or monthly premiums. Unlike,
was it the mobile phone and mobile money that made microinsurance possible because of the collapse in the channel cost, or not?
No, not really. In Kenya, the mobile phone has not really taken off for insurances. In other countries, yes. In Ghana and so on, there's a lot of mobile insurances being sold. But in Kenya, it is not so. So, somebody like Azuri makes a lot of difference to us. Azuri is going into a very different market, a market that we cannot penetrate, because they are going into the rural areas where there is no power, and they provide power, they provide television and so on. So all of a sudden, a person who gets that power changes his whole lifestyle. But the thing that an organization like Azuri offers to us is it gives us a completely new set of market. It gives us an area where we would have never been able to penetrate. Insurance, that's why, the other reason for microinsurance is really mass insurance. And what happens is distribution costs have to be very low. So with Azuri, what happens is that our distribution costs are virtually, reduced completely, because Azuri does the distribution for us. It goes to the marketplace, it goes to the individuals, and it explains to the individual what cover we are providing. And that cover is very, very, that cover is quite interesting, because what we are giving is hospital cash. In case somebody is hospitalized, we will provide that person with income. After the second night in a hospital, there will be an income of either 500 shillings or 1,000 shillings per night for the next 8 nights. So the family will get, the person, if they are critically ill, or even not that critically ill, but they need to stay in the hospital, we will make sure that, by us giving that money to the family, the income to the family, the person will then take care and get fully recuperate fully, so that they can go back healthy. But then that 8,000 shillings per hospitalization, or 30,000 shillings in a year, is quite an enormous amount for the person, as they are covered. With that, we also, in case, God forbid, if somebody in the family passes away, then there is also funeral cover that we will pay for. So we'll pay about 10,000 shillings towards the funeral. So there are quite a lot of benefits that the insurance cover gives in. But what it brings to us is, through Azuri, is that we have also covered the televisions in that
this
cover.
is if the television breaks, or
If the television breaks, or if somebody hits the television, children are playing, and they hit the television, it falls down and cracks, the insurance provides that cover as well. So the partnership that we have with Azuri, we are trying to create more and more of those partnerships, and we're also trying to increase our market penetration through Azuri, because then what happens is we can go and see which are the other covers that we can provide the group of people that Azuri is dealing with.
which are the other covers you think you can provide?
We think that we can provide them cover for the hut.
Yes. Against what? An accident, a fire?
A hut could be worth 20,000 shillings. Huts would either go, a lot of the huts are built in areas where there is prone to flooding. That's number one. Number two is it could get burnt down. So we could actually give cover for that hut or the house. A lot of the houses that Azuri will provide the system to will be also made of stone. So the value will be higher. It might be 100,000 shillings or so, and the chances of them having some peril, that covered peril that might destroy it, we can now give them that sort of cover.
What about, if you look, when I was studying, you're big in agriculture, from what I can gather. When I was did some work for Nestle, and I went to Kiambu, and I noticed two things. Every farmer I met was over 60. The kids had gone.
That's right.
And then what I also noticed was so many of these farms were actually smallholder farms, a few acres. Not, they weren't on the big scale. Is there an opportunity for you there to provide services to these people as well? I mean, I saw somebody's trying to do an Uber of tractors, for example. So you can just is this the future? Is this where you want to be?
What you're saying is quite interesting and important for us. What is happening is that the children will not want to stay because they don't see any future in the farming. But as soon as we bring in the area yield insurance cover, and also we are also looking at the dairy cattle and so on in those areas, you will find that if the farmer is regularly getting up to 80%, either because of good crop or if there is a failure in part of the crop, we will make up the difference up to 80%. There is a regular food on the table, there is a regular income for the farmer, then you will certainly find that the children will start thinking that farming is a good thing. That is number one. And what happens is that if out of the 3 or 4 children the farmer has, 1 or 2 stay on the farm, will mean that the farm will improve. What you are saying about the Uber of tractors and so on, we feel that if we cover a certain area and a certain number of farmers, we could, with somebody, set up small mechanical depots to provide mechanical tools for the farmer, hose, planters, irrigating equipment and so on. so that the farmer can rent it out for an hour, for a day or so on. And we might not get involved in that, but we can work with somebody who will actually provide those services. So you could have in every farming area, you could have 3 or 4 small depots which could provide all these different mechanical tools, which will then make the farmer's life better. Now, if those mechanical tools are available, chances are the crop value of the crop and even the production of that land will go up. That will hopefully certainly provide more incentive for the children to stay on the farm, because when they come here, they don't really get any much better benefit. But when they are at home, they got a home, they got food, they got family, but now they've got a farm that now produces more. So it's something that you're thinking, you're giving me the same thought which has been at the back of my mind. Yes.
Ashok, I keep seeing this tagline, ensuring happiness, and I just wonder, what does it actually mean? What's the message that you're trying to send to people with that phrase?
Insurance is about taking care of yourself and making sure that whatever you're insured, your assets, your life, your health, will be taken care of when there is a need. So what we are saying is that insurance is actually about happiness. So let's take, for example,
peace of mind.
Peace of mind, yes. And peace of mind, when you have peace of mind, it is all a happiness that, at least you say that you've taken the right decision, and by taking out insurance, you will get the peace of mind and your family will be taken care of. If somebody, if I were to fall ill and I didn't have any insurance cover, or if I had insurance cover, if it was not adequate, then it will really put a lot of strain on the family. But if I had an adequate insurance cover, and it was made sure that I got all the treatment that I needed, and got well again, then the family will still be intact with me in good health, and everybody else around me not really being anxious. So what will happen to them is that we have ensured their happiness by making sure that the insurance cover that APA gave you took care of you, and at the same time gave you full health and continued in your journey of happiness.
Ashok, to our happiness.
Thank you. Thank you
so much.
Yes.